Hi, Nina Kaufman from AskTheBusinessLawyer.com. I'm here at the New York Times Small Business Summit with Dawn Fotopulos, speaker, educator, serial entrepreneur, and founder of BestSmallBizHelp.com. Thanks for being with me here, Dawn.
Thank you so much. That was the best introduction I think anybody's ever given me.
Well, thank you. So I wanted to ask you some questions because you've been here in the guise of panel moderator, facilitator, fly on the wall, participant, networker. What are some of the trends, some of the issues you're seeing, some of the complaints or concerns that small business owners have?
It's a really good point. And you know, right now we're in a tough economy, not new news. And there was some very interesting research that just came out from Citibank, in fact, where they interviewed 750 small business owners across the country. Mm-hmm. And they found out some very interesting stats, one of which was 50%, over 50% of small business owners are not paying themselves a salary.
Wow. And
about almost 40% of those, of all small business owners haven't paid themselves a salary for over a year. There is only one reason why that happens. And it happens because the small business owner has to make a decision. Is he or she going to keep the doors open and not take a salary and take food out of their mouths to pay their employees, or do they risk taking a salary? And I think what we're seeing is that there's a tremendous amount of uncertainty in the marketplace, and I think small business owners, who are the canary in the coal mine, they're really good barometers for the level of risk in the system. And they don't have a safety net, and they don't want one. And I give them so much credit because they really are the heroes of the U.S. economy. And I think at this conference we recognize that, and they're our way forward in the economy. But right now, one of the fears is this whole idea of cash flow. People are taking a long time to pay their bills. And in fact, it was very interesting in my panel called Financial Boot Camp, which is like the most unsexy topic you could come up with, but an important topic.
Sure.
There was a guy at the table, and he's doing business with a name you would know, a retailer, a very famous retailer, and he does quite a bit of business with them, maybe $10,000, $15,000 a month with them. So to a small business owner, I mean, that's
that's a nice chunk of change.
It is a nice chunk of change. And he said, not only do they wait 90 days to pay him, but then they play games and they start taking all these discounts, and then they take all these chargebacks, and and so 5% here and 10% there, 5% there. Before you know it, you're underwater with the client.
Right.
So we had a very interesting conversation about maybe the biggest clients are not your most profitable.
Right.
And one of the things I suggested to him was, I said, find out how important your products are to this client's P&L. In other words, find out what the sales per square foot is on average for that client. And if your products are selling faster than the average, that means you're contributing more to that client's P&L than anybody else. So when you go in to negotiate and say, look guys, the discounts, we get the discounts, but we can't continue to play like this, otherwise you're going to put me out of business. And then demonstrate to them that you're really adding a tremendous amount of value. And the likelihood is, if you've done your homework, the client's going to pay attention. So that was one thing. I was also interviewed by Entrepreneur magazine, and she asked me the question. She said, how can we improve cash flow? And I said, well, one of the ways you can do that is invoice people smaller invoices with greater frequency. Right? So if normally you would invoice $10,000 under normal circumstances, wouldn't be a big deal. Somebody would sign off on it, you'd get paid. But in a recession, the signing privileges go up the authority food chain. More and more people have to sign off on that invoice before you get paid for 10 grand. So instead of sending one invoice for 10 grand, send four at $2,500, and then you don't have to have 5 signatures to get paid. So there are a whole bunch of things that you can do. We've talked about it on BestSmallBizHelp.com about different things you could do for invoicing that will help you help the client pay you.
Right.
And they're not difficult to implement, and they don't cost anything. It just requires a little bit of discipline. So that's some of the stuff we talked about.
Right, terrific.
Yeah.
Now, you were also moderating a panel on You Are Your People.
Yes.
And the importance, if you're going to grow, you have to be more than just Dawn Incorporated.
Right.
That you have to be able to consider a business that's scalable, that has staff. What are some of the solutions that you heard of that can help small business owners screen employees more effectively?
Well, that's a really good question. And you know, if you get the hiring practices right, everything else is so much easier. I mean, one of the things that small business owners are famous for are hiring people that are just like them, or hiring people that they like who may not end up working out because they may be very smart but they don't have the right attitudes and so on. So we spent a lot of time talking about hiring practices. And one of the guys, Dave Anderson, who is phenomenal, I had 3 tremendous people on my panel. Dave Anderson was one, Riva Lasansky was the second, and we also had Les McCune. There are a number of things that people have that you absolutely cannot train for, and you have to screen for it. And character was one of those things. And he said, if somebody makes a claim that they've accomplished something on their previous job, he said, I live in that situation. I live on that question, and I drill down and drill down and drill down because my BS meter has to, figure out, is this person real? And what's the likelihood that if they work in my organization, they can replicate that? So he asks very specific questions. He asks, give me some metrics around that. You know, if you were a car salesman, how many cars did you sell? In what time frame? And year over year and month over month and so forth. Because he said at some point, if it's not real, someone's going to run out of answers. So the other thing that we thought was interesting was there are software programs out there where they can actually create simulations for a job, and somebody can test in that simulation how they would work on the job. And those simulations they're completely colorblind, they're completely sex neutral, and a few of them have a very high correlation. How somebody responds in the simulation is very highly correlated to how they're going to act on the job. And some of these simulations can test for things like attitude, honesty. I mean, some of these sort of intangible things.
The things you can't train for.
You can't train for, but things that are really important leading indicators for how these people, this new hire, is going to affect your culture. So we talked a lot about culture, and Les McCune is very funny. He's a real live wire. And he said, the golden rule really applies. Treat people the way you want to be treated. But Riva Lasansky brought up some really great metrics. She said, for a lower level employee, to replace that employee is going to cost you 30% of their annual salary, which was really interesting to me because it was higher than I would have guessed, right? For an entry-level employee, I figured, well, what's the big deal? For a mid-level employee, it will cost you 150%. Wow. Right? Because what it's really saying is a lot of the value add and a lot of the intellectual capital is in that middle management.
Leverage for your business.
That's exactly right. And then if you have somebody who's highly specialized or highly skilled, it's 300% their annual income. So the idea is your hiring practices have to be really tight and really good business hygiene around hiring practices. But then for the millennials and for the Gen Ys, you've got to engage them. And there were a couple of comments that were just wonderful. Answer the question, what will the employee learn? How will they grow? In other words, what will they become? And how can they make a difference in your organization? And he said, that's more motivating even than money to the millennials and the Gen Ys. And we need to hear that as small business owners because we need to know what's the leverage that we have in this marketplace if it isn't money. Right? And what you find is a lot of the millennials are going into nonprofits because they want to make a difference, and they don't realize they can make a difference in for-profit enterprises as well. And one of the things that Les had said, which I thought was absolutely brilliant, is he said, if you want to develop your people, send them into your value chain. Tell your employees to go work with one of your suppliers for a day. Go work with some of your customers for a day. And I thought, man, that is just genius. So that's really what we talked about. You are your people. And we also talked about how to make subcontractors your collaborators. So even if you don't have full-time employees, you can work with your subcontractors in a way where they are equally as vested in your success.
Okay, so let me jump back a little bit to the solopreneur who doesn't necessarily have employees. It takes a leap of faith to say, all right, I'm going to plunk down the money and bring on somebody full time.
Yes.
How do they get to that place? And you as a numbers person, what do they need to be thinking about in terms of what they have in their pot, what they have in terms of business coming in, where they say, all right, now really is the time for me to hire somebody?
That's a really brilliant question, and it's a tough question to answer, and it actually came up in our financial boot camp session. But this is what I say to almost every business owner. I said, look, first of all, when you hire somebody full-time, the cost to the business is about 50% higher than whatever it is they're getting paid in salary, because of all the ancillary expenses, the benefits, the health insurance, the unemployment insurance, payroll taxes, all of that stuff. So if somebody, to make the numbers easy, is earning $10,000 a year, right, the real cost of the business is $15,000 a year.
Okay.
So that's for starters. But when you take a look at your profit and loss statement, in order for the business to be able to, the golden goose, right, that's the business. In order for the business to be able to afford that person has to return back to the business at least 5 times its water weight. So if somebody is, is costing you $15,000, then they need to be able to return $75,000 in either revenues, cost saves, or productivity increases in order for you to be able to afford them. Because what happens is, if they are not that productive, then it ends up that you are basically subsidizing effort from other productive efforts in the business. Everybody that you hire has to contribute to your top line and your bottom line. So that's the measure. So if you hire a salesperson at $15,000, they need to bring in at least $75,000 in sales, and the truth is that's really just a break-even number. So really that salesperson needs to double, triple that $75,000 in order for you to be able to afford them. And a lot of small business owners get caught in the trap of hiring expensive salespeople because they promise the world and they don't deliver. So the other way that you can make it more affordable is what you can do is you can shift some of the compensation from a straight salary to overcompensate somebody in bonus if they deliver. So you really incent them to go out there and to present you and to really put the work and effort in. So that's the other thing. If you can correlate somehow your sales, general, and administrative expenses, which would be your people, to what happens to revenues, then you don't get caught in a short squeeze. When revenues come down, you still have this very, very high employee expense that you can't cover just because the revenues aren't there.
Right. Now it sounds like with all of these things, it's not just a matter of, yay, let's just bring in people and let's hire them. You really need to know your numbers and you need to know your metrics.
You absolutely do.
Do you have thoughts for resources on where business owners can get a clearer sense of how can they learn those metrics in their business?
Well, I do actually, and it's a little self-serving, but it's an epidemic problem that most small business owners are brilliant at what they do, but they really don't understand their navigational instruments, right? How to read a profit and loss statement, what is it telling you, and how to make good management decisions. So we put together the Instant CFO course, and it's on bestsmallbizhelp.com. It's a $250 value, and we're selling it for $49. It's live streaming. It's me in front of a whiteboard, and I take you through step by step the profit and loss statement, the cash flow statement, and the balance sheet, which are really your navigational instruments to helping you get to your profitability destination. And the idea, of course, is that each part of each of those videos are short and sweet, only what you need, no fluff. And in the time it takes you to drink a cup of coffee, you can watch one of those videos.
Terrific.
Yeah, and I will tell you, the hundreds of people who have watched them have said to me, oh my gosh, I've been in business 10, 15 years. I never knew any of this stuff. So it has really changed the future of a lot of small businesses, and it is stuff that every single person who is in their own business should know.
Terrific.
Yeah.
All right. Well, once again, I'm here with Dawn Fotopulos at the New York Times Small Business Summit. Obviously, people person, numbers person, and instant CFO from bestsmallbizhelp.com. Thank you.